Financial education, how to make consistent profit with trading. Hey guys, welcome to Stacking Stocks once again, and many thanks for tuning in today. What do you think we have for you today? As always, we have amazing and informational content. Did you tune in to our previous session? If you missed the session, don't worry about it. Let's have a quick recap of our last session. What were the headlines? During our previous session, we gave a concise guide on the stocks that you should buy in 2021. If you tuned into our last session, how is it going with those stocks that we discussed? Have you been following on the progress of the stocks? Nonetheless, we'll try our best to keep you updated. Now let's move on to today's headlines. How can you make a consistent profit with trading? If you think this is an easy task, I'm here to tell you that it's not. Have you ever heard of the saying, if you fail to plan, you're planning to fail? If you're serious about being successful, the latter saying should be a part of your life. Are you a trader that makes a profit consistently? There are two choices available to every trader. You either follow a written plan methodically or you fail. According to a 2017 paper titled, Do Day Traders Rationally Learn About Their Abilities by Barber, Lee, Liu, Odin, and Zhang, 75% of day traders quit within 2 years. As you can see, you need to strategize if you want your business to be as profitable and successful as possible. A report by Investopedia gives us some key takeaways on a lucrative trading plan. What do you need to be a successful trader? Here are some key essentials. Having a plan is essential for achieving trading success. A trading plan should be written in stone, but is subject to reevaluation and can be adjusted along with changing market conditions. A solid trading plan considers the trader's style and goals. Knowing when to exit a trade is just as important as knowing when to enter the position. Stop-loss prices and profit targets should be added to the trading plan to identify specific exit points for each trade. Have you written any trading or investment plans? If you have, then you're part of a minority determined to succeed. It takes a lot of time, effort, and research to develop an approach or methodology that works in financial markets. While there are never any guarantees of success, you've eliminated one major roadblock by creating a detailed trading plan. Moreover, you have to ensure that your plan doesn't have flaws and there's adequate preparation. Document the process, learn what works, and avoid costly mistakes faced by novice traders. Do you check what happens in the world before the market happens? Do you gauge the demand before venturing into trading? It's essential to wait until the economic or earnings data report is released. On the other hand, some traders are willing to take unnecessary risks. It takes a lot of skill and resilience to be consistent in the market. Naved Abdali, a financial advisor, shared his thoughts on successful trading skills. He said, "A trader needs to be highly skilled and extremely lucky to beat the market consistently. If a trader is highly skilled but not lucky enough, or extremely lucky but modestly skilled, he'll beat the market occasionally but not consistently. Traders that are modestly skilled and modestly lucky will briefly beat the market but will be behind the market most of the time. Everybody else will lose money on a long-term basis. That's 90% of the traders." According to Chris Caper, an experienced professional trader, he says approximately 33% of traders can profit over 3 months. However, the percentage of those market participants who can do this consistently on a yearly basis stands at 7.7%. That means that over 92% of traders can't attain this goal. Fortunately, you can improve your chances of achieving consistent profits in trading. If you desire to make maximum profit, you need to choose your trading style and strategy. How exactly do you get to do this? Well, there are several categories of choosing a trading style. This includes scalping, swing trading, day trading, and long-term trading. If you can tell, the essential difference between these categories is the time frame involved. In scalping, there's a 1 to 15 minute window where the positions are opened and closed. In swing day trading, the trading positions are kept open for several days to several weeks. Day trading, as the name suggests, entails the closing of all active trades before the end of the business day, whereas long-term trading lasts for several months. With this information, you can confidently choose one or several trading strategies by selecting the valuable methods and disregarding the tactics that failed in the past. As you can see, the trader will have options on the tested strategies that he can use consistently. As we all know, traders are not always guaranteed to achieve more than 50% of winning trades. How can you attain maximum profit? A proper risk-reward ratio and realistic profit targets should be set. In most cases, the ratio is set to 1 to 2. For example, if a trader aims to gain 100 pips from a given position, he or she considers setting the stop-loss order below 50 pips of the current market price. This improves the odds of success in favor of a trader, as he can earn payouts with even a winning trade of 40%. Setting realistic profit targets is the key to forming consistent profit Forex strategy. As you have noticed, every currency pair has a different average daily volatility. Therefore, knowing where the daily fluctuations range will assist you in setting realistic profit target. Many financial commentators describe leverage as a double-edged sword. You may want to ask, how exactly is the use of high leverage a double-edged sword? And this is because over-leveraged trading can easily lead to severe losses, from which it'll be very difficult to recover. For example, if the market goes against the open position by just 25%, in the case of 400 to 1 leverage, it might be enough to wipe out the entire trade, causing a loss to his or her entire investment. Therefore, if you don't want to incur huge losses, it's advisable to use a lower amount of leverage. Another essential element of proper risk management strategy can be to not use more than 5% of one's trading capital on a single trade. That's because poor money management can result in irreparable losses. For example, if a trader risks close to 50% of their account on one position and it happens that the market moves in the opposite direction, they'll have lost half of their investment. One loss alone will wipe out 1/4 of their entire trading capital. It's very wise to keep a trade journal. Tracking progress and pursuing consistently profitable trading goes hand in hand. This comes in handy because you can track past performance and also learn from previous mistakes by measuring their average monthly earnings and losses. Trade journals can also serve as a motivating tool. They can provide insight into the results where a market participant can observe that in spite of all his or her mistakes, the average monthly earnings are getting better. And this can serve as encouragement or motivation to do better. You ought to do a regular fundamental indicators research. Being in the light on those kinds of matters concerning the latest economic announcements gives you a better point of view on the undervalued currencies and might put you in a position to succeed with their consistently profitable Forex strategies. Even though it might be difficult to keep track of a dozen currencies, it's advisable to be paying attention to the latest gross domestic product or GDP, consumer price index, CPI, unemployment rate, and other important releases, as well as interest rate decisions, and study the 8 major currencies which compose the Forex major. Can a trader build a consistently profitable strategy in Forex by trading with only major currencies? Well, traders can confine their trading to US dollars, to the euro, to the British pound, Japanese yen, the Australian dollar, the Canadian dollar, the New Zealand dollar, and also the Swiss franc, and still possibly succeed with their profitable strategy because it's relatively easier to keep track of the latest technical and fundamental developments and make up a number of pairs for one to find trading opportunities. If you want to make consistent profit during trading, this is your go-to guide. We'll keep you posted on new or fresh strategies. So once again, thanks for joining us here on Stacking Stocks today. Don't forget to like, share, and subscribe.